Thursday, September 25. This is your trade rundown. This day was fairly easy. A few of you had a little bit hard time, and a bunch of you ended up doing well. So, what do we see here? What do we see here prior? Oh my gosh. What do we see here prior to New York even opening? We're underneath the 500, and we are in a downtrend structure, right? Our downtrend structure is right here. Just a series of lower highs. Boom, 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 boom. So what am I expecting price to do? Probably go down. It's lovely because where price is at right now, before 6:30 even opens, we're at perp, we're at level, we're at the downtrend line, and we're at the gold zone. Are we overbought or oversold? We're pretty like right in the middle. That doesn't really help us there. So cross lines, I'll just leave it out. 620, play this out, look for our entry. 625, we only take entries at 630. So 630 right here. Big doji. Bigger wick to the top side. This right here, knowing that we're in the downtrend underneath the 500, this is enough for me to get into one contract. This is where I'll get into my initial entry. Come on, computer. Right? Risk the candle. Roughly about $64. And let's see what happens here, right? Because what I'm telling myself is if we're rejecting, and this is juice fundamentals, right? Gold zone movement. If price is going to reject the gold zone and continue the downtrend, we'll at least come down to right here, the next gold zone. Juice fundamentals, gold zone movement. Boom. First entry here, I'll take that risk. And why do I take the risk here? I take the risk here because if price is going to bounce up, I'll take this loser, and then I'll take the buy here as price goes up to the next gold zone. Everything, all of our juice entries are really fundamentally based off of the gold zones. I like when we're near the gold zones. Gold zone, perp, level, downtrend line. Enough for me to enter in. Next candle pops off. Boom. I'm entering in. This is where I'm entering in. Boom. Go full port. Full port, my normal like 500 risk. What am I looking at? Now I'm looking to the downside. I'm telling myself that price at a minimum is probably going to come down towards here. The next gold zone. That's it. Play it out. Done. 5 minutes. 5 minutes later, you're done. So some of you guys did not take that entry to the downside. I don't know why. That would have been the better and the easiest entry to trust and to take down. But some of you guys ended up waiting wicks to the bottom, wicks to the bottom, wicks to the bottom. And then you guys entered in over here as price shot up. It's an all right entry, but it's against the 500, right? You guys know I like to trade. If I can take an entry with the 500, I would rather take that entry. At this point, I wouldn't even be looking to take the buy because I've already made my money off of the sell. The first 10 minutes of New York Open, right? If you take the entry here, that's already 705. If you wait for price to go up a little bit more, you know, what time is that? It's like 7:35. So you would have had to have been on the charts an hour longer than everybody else, right? And it's taking it against the 500. I don't like taking the entries against the 500. Are there times when I will take an entry against the 500? Yes, but it's definitely not the second entry of the day. It would have been the first entry of the day. My first entry would have been right here, 6:30, coming down, done for the day 5 minutes later. Excuse me. That's it. Thursday, September 25. For those of you interested in learning how to trade, hit me in my DMs. This is the juice trap, baby. Super easy. Lines bouncing off of other lines. I think anybody can learn how to do this. Ed with the juice trap. I will see you guys later. I'm out.